Hi there, welcome to Nepi Invest. Thought it's a good idea to have a bit of a chat about Big Tin Can. And even though I did a video on this company recently in relation to their September quarter Appendix 4C, which was a really good quarterly report for the company's management have made a decision that has completely destroyed positive sentiment. Yes, management can make decisions that can shift sentiment from negative to positive or the other way, from positive to negative. Now, the sentiment in Big Tin Can was negative for a long period of time. The share price had dropped from $1.50 all the way down to a low of 45 cents. But upon the release of their September quarter Appendix 4C, it did look like sentiment was starting to shift. Not only were we seeing signs that sentiment was shifting, we also were seeing signs the share price of this company was trying to move into an uptrend. And as a shareholder of this company, I wanted to see positive sentiment behind this company. I wanted to see the share price in an uptrend. And then management absolutely destroyed that positive momentum and sentiment in the share price. And that's what I'm going to discuss in this particular video. How Big Tin Can's management absolutely destroyed the positive sentiment behind the company. Before we get into this particular topic, this is the daily chart for Big Tin Can up till the end of trading on the 6th of December 2022. Now, the start of this chart is October 2021. And from October 2021 to really October 2022, so for about a year's period, the share price of this company was in a downtrend. Now, there was a double bottom here at 45 cents. The first bottom was in June, the second bottom was in October, and double bottoms are fairly good technical signals that possibly the bottom in the share price of a company has been reached. And then the company released their September quarter Appendix 4C. Share price on October 27, the date they released that particular report, was up 25%. 2 trading days later, on October 31st, the share price rose another 13%. Now, this in itself doesn't mean the sentiment is shifting from negative to positive, because if we look at the last 2 rallies in the share price, back in March and also between about June and August of this year, after the rally in the share price started to turn down. So sort of like an inverted V. When we see the share price action after this little rally, there's no drop in the share price. It's going sideways. So whenever I see a rally in the share price and then the share price just goes sideways, that is telling me that there is a strength in this rally. So I was getting a little bit excited about this particular share price action in Big Tin Can. I was also getting a signal just in the moving averages that potentially the share price of Big Tin Can was moving into an uptrend. And if Big Tin Can could get above 82.5 cents, that would be an important share price, because that's the old highs we saw back in August. So if it could get past those old highs in August, that would confirm the share price was moving into an uptrend. And as a shareholder, you want to see the share price of any company you own in an uptrend. But unfortunately, that uptrend has been broken, and the sentiment has instantly been shifted from positive to negative because of one decision from the management. But before we get there, let's go back to 2nd of December 2022, because there was a takeover bid from SQN Investors. This was an unsolicited, non-binding conditional offer from SQN Investors at 80 cents per share. Now, the market did react quite well to this. Share price rose another 11% to 75 cents. And that makes sense. You always, whenever you see takeover bid, the share price should always fall short of that particular price, because there's always going to be a risk that the takeover bid won't be followed through. So that's why there's a 5-cent difference between the takeover bid at 80 cents and where the share price finished up at 75 cents. So keep those two numbers in mind as we move forward, 80 cents and 75 cents. And then on the 7th of December 2022, just before trading had begun, Big Tin Can went into a trading halt. That's why that chart, I went to the end of trading on 6th of December. And when I saw this trading halt, in fact, there was a pause in trading and then they went into the trading halt. I thought it had something to do with a takeover bid. I thought possibly there was a little bit more, I won't say friction. What's the opposite of friction? A little bit more clarity in regards to the takeover bid. Maybe there was another takeover bid for the company at a higher price. But this was in connection with a material capital raising by way of an institutional placement and a share purchase plan. As soon as I saw this was a capital raising trading on, I was confused. And there was a few reasons why I was confused. The first reason, of course, was simply because just recently there was a takeover bid for this company. And for the very fact that company was going through a capital raising after a takeover bid actually did make me a little bit confused, because I have never seen that before. I have never seen a company go through a capital raising a few days after a takeover bid for the company. Not only that, when you go back to their Appendix 4C, Section 4, you can see this company has $35.3 million of cash on hand. So why do they need to do a capital raising? The only reason I could think of was a material acquisition. And if they were doing a material acquisition, why not name it in the trading halt or something like that? They didn't actually mention any talk about acquisitions in the trading halt. They also mentioned in their financial year 23 outlook that they expect to be cash flow break even in financial year 23 and positive adjusted EBITDA to materially exceed financial year 22. So even though they are burning through a little bit of cash, I wouldn't expect, based off their expectations, that they would burn through a lot of that $35.3 million of cash. So why are they doing this capital raising? It confused me to no end. And then at 1:43 p.m. on the 8th of December 2022, which was the Thursday, there was another announcement from the company titled Media Regarding Approach from SQN Investors. So the board of directors of Bigtincan received a letter marked strictly private and confidential from SQN Investors that has been published by certain news platforms, and I did read it through, in which SQN Investors expressed their view on the company's strategy that is not shared by the company. So this was a really negative letter from SQN Investors in regards to this capital raising. So I'm not going to go through the whole letter, but you can find this letter. Just Google SQN Investors Bigtincan letter. So this is a part of the letter. So just taking snippets. The investment manager of the SQN Investors Masters Fund, the largest shareholder of Bigtincan, which is fairly important, today sent a letter to Bigtincan's board of directors expressing our objection to the potentially dilutive and value destructive $30 million raise for acquisitions foreshadowed by its trading halt and rumored in this Australian Financial Review article. We believe such a transaction would obscure the company's organic growth changes and would be a poor use of capital. In my opinion, and this is just my opinion, one of the, if not the most important thing that management of a company have to do is capital allocation, or what to do with that capital. So SQN Investors are saying this is a poor use of capital. To be clear, the company is on record with its CEO, David Keane, stated on 27th of July 2022 that the company is well-funded, again, well-funded with its cash balance, and we already know that from the cash balance in the September quarter. Given the cash flow discussion we've had today, the company is not looking to make any new capital raising activities. So this was 4 months ago, and there are no acquisitions currently planned. This disclosure is one that we and likely other shareholders have relied upon when making investing decisions. Now, a lot can happen in 4 months, but they have enough cash for working capital requirements. And the very fact that the share price has fallen a lot, down to a low of 45 cents, means any capital raising is going to be more dilutive to shareholders. And this is one reason why SQN Investors is not happy. They'd also like to see a lot more organic growth from this company and less acquisitions. So that's why SQN Investors is not happy about this particular capital raising. It's highly dilutive, and they believe it's a value destructive capital raising. I'm not sure I totally agree with SQN Investors. I believe they also have their agenda, just like Bigtincan might have their agenda. And then, after trading had ceased for the day on Thursday, 8th of December, at 5:44 p.m., the company released a couple of announcements. They released a capital raising presentation. They also released this particular announcement in regards to The institutional placement was successful, and they were launching a share purchase plan. And this is really important bit to execute on identified strategic mergers and acquisitions and growth initiatives. So one of the reasons why they are doing this capital raising was because of mergers and acquisitions to gain additional technology and accelerate the roadmap within the second half of financial year 23 at accretive values. They also want to take advantage of unique structural opportunities for both organic and inorganic growth building on Big Tin Can's existing technology platform. So my thought when I saw this training hold, the only reason they would have to do a capital raising was if they had some acquisitions in mind. So it does seem like they do have some acquisitions in mind. But personally, as a shareholder, I want to see what acquisitions they are thinking about. Just don't do a capital raising because you have some acquisitions in mind. I need to see if these acquisitions are worth it. One thing I forgot to mention was the price of this capital raising. It was at 60 cents. So remember that the takeover bid was for 80 cents. The share price rose to 75 cents. And then the management decided to do this capital raising at 60 cents, a significant discount to where the share price was and a significant discount to that takeover bid. So a 20 cents, that's 25% discount to the takeover bid. And the market was furious about this particular capital raising. We know the market absolutely hates this capital raising. We know the market is absolutely appalled by this capital raising because of how the market reacted. In fact, the market pushed the share price lower than the capital raising price at 60 cents. And the share price for Big Tin Can fell to 56.5 cents, down 21.5% for the day. And it absolutely destroyed any building positive sentiment behind this company. And I know that just by how the market reacted. But I also went to Hot Copper just to see the reaction among posters there. And it was absolutely negative. There were a few positive thoughts there, but it was mostly negative. But we don't need to look at Hot Copper forums. We could just see how the market perceives this particular capital raising by the share price action. And the market absolutely hates it. The sentiment in this company is now back to negative. It wouldn't be surprised to see the share price fall a little bit more from here. But I don't think it should fall any further because I think 60 cents. Now, the share purchase plan, so I as a shareholder can buy shares through the share purchase plan at 60 cents. Why would I buy shares at 60 cents in the share purchase plan when I can buy at market for almost 10% lower than the share purchase plan? So I think the share purchase plan will be disaster. And for those institutions who bought in at 60 cents, they're looking at the share price now going, oh, that was a mistake. We could have bought Big Tin Can shares at 56.5 cents, not at 60 cents. So this is another reason why this has been a disastrous capital raising. It's destroyed positive sentiment. The share price is now lower than the capital raising price. And even though I don't think the share price will fall any further than this, I think there is potential this capital raising has destroyed the management or the shareholders' trust in the management, and if not just the shareholders, also institutions, fund managers, and the alike. That's all I have on Big Tin Can's absolutely appalling capital raising. I myself am not calling it appalling. The market's calling this capital raising appalling, and how management decision, in this case a capital raising, can destroy positive sentiment. If you have any thoughts about Big Tin Can, this capital raising, or anything else, I'd love to hear it. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.